Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So as we said in our weekly report, that daily picture of the dollar index, it is a bit more representative compared to the euro currency. It's because on the dollar we have clear patterns, we see targets, and although we do not see it on euro currency, but euro actually is a big bulk of the dollar index. If I had not missed something, it's around 60% of the dollar index consists of the euro. So if you do not have the same patterns on the euro, it doesn't mean that it can't go in the same direction as the dollar index once these patterns will start to work. So in the recent few sessions, overall performance was relatively slow. It's market, and actually people are gradually diving in an atmosphere of the Christmas. So usually in this time before the Christmas and until the New Year's Day, usually some silence period on the markets. Still some interesting events also could happen. So for example, some nervousness on the market yesterday, as you can see the performance on the intraday charts on the euro currency in particular. That just explains by the Japanese yen. So as you know, among the major central banks, the Japanese yen are the second one who officially, after the Bank of England, who officially has capitulated on the way on the tightening, or better to say, Bank of Japan even hasn't started any tightening. So Bank of England is somehow trying to do this, rising rates and so on, but Bank of Japan stubbornly just keeping the quantitative easing. And we already warned about this in our Telegram channels, or additional information analysis on the Japan was now a weekly report that this can't lead you to some success. So definitely sooner rather than later, but you will get the big problems with this uncontrolled liquidity printing. And what has happened yesterday? Yesterday it was massive margin calls on bonds. So the yields have jumped above the 0.42%. It's really big move on Japanese yen government bonds, and everybody, so margin call starts to close in the position, and a big amount of the cash was needed to close the margin calls, and that explains the demands for the Japanese yen. Because if you'll take a look at the yen, when the other markets shown in one direction, and I will show you on the daily chart of the yen, you could see that yen is turning in absolutely different direction, although we should go with a common trend. But here, as you can see, what has happened, and that has brought some really I would say nervousness on the markets, and get a reflection on other currencies as well, including the euro currency. But on the dollar index, you can see, yes, we've got some volatility, but not as drastic. It's just because the Japanese yen takes the small part of the dollar index. And I would call even this performance yesterday on the dollar index as a bullish. It's just because take a look what has happened. Market has dropped lower, taken out of the lows of the previous session, returned right back up, and closed almost above the previous top. So it's almost some kind of the reversal performance or something of that sort. So I wouldn't call it as a bearish performance. Besides, all the patterns that we discussed here are still valid. If we transpose this situation on the euro currency, then approximately the three drive patterns suggest that euro currency, euro currency should drop somewhere below 104.40 area, taking out of these lows. That's what comes from the analysis of the dollar index. So speaking on the euro itself, let's take a look at the top. You could see what's going on here. It's also some kind of the bearish performance. So it's market trying to move higher and showing the pullback close at the end, at the bottom of the session. Once again, any attempt to go higher is immediately selling out, and market dropped back. So this also suggests some pressure of the bears are growing on the market, and in general that just confirms, well, so brings some, maybe it's minor, but in general this is still some brings us more confidence with the expectation of the downward action. On the 4-hour time frame chart, as a result of this spiking in action. And you could see that what we get, overall performance stands really choppy. I would prefer to get it a bit stronger and faster when you're dealing with the bearish reversals. But maybe, as I said, it's two reasons. First of all, is yesterday's collapse on the Japanese yen, and also it's maybe some, well, drying of the liquidity. At the current moment, market's a bit thin, and that leads just some, as you can see, gradual bit choppy action. As a result of this action, take a look, we've got the grabber. So the grabber suggests downside continuation below these lows. So in general, on the 4-hour time frame chart, nothing has changed significantly for those who trade on a bit higher time frames. I mean, daily 4-hour time frame chart, you just could keep watching for head and shoulders patch. Once this will be formed, you could consider taking the short position. So by the way, it will be somewhere around the same levels. It's around 106, because here stands the potential left arm right there. For others who trade in lower time frame, you could try to stick with the grabber directly, for instance. So recall what we talked about this situation in our weekly report. We said this market completes the COP. Should be some pullback to the confidence. There was the confidence area, and where you could consider taking the short position. Actually, let's take a look. The market has tested the same area twice. First is before COP and butterfly that we discussed, if you remember here, has been touched, and the second time when it's already has been tested, COP, and shows another retracement in the way of the catalyst triple to sell pattern. Now grabber has been formed, market collapse. So supposedly with this performance, reaction on the COP should be over. And if you would like to take the short position, you could consider, for instance, two levels that based not on a whole downward action, but only on a grabber swing. So this is minor scale trading. As I said, it's just for those who trade on hourly chart and lower time frames. Besides, this approach lets you to place for a tight stop. If you're relying on the grabber, you could place stop just about its stop, right there. So from that standpoint, you can consider these two levels for possible entry on the short side, and then see what will happen. That's the scenario for even lower time frames. Speaking about the bullish position currently, guys, I do not see any background for that. So maybe I missed something, but well, in general, this performance that I see not inspiring me to make any buying on the euro currency by far.